Today we're talking about silver mainly, which is breaking all-time records. Gold is also moving to an all-time record today, so we're going to go straight into that to look at the chart and tell you what's happening. The chart is live. Price at COMEX is $83.22. For silver, that's an all-time record. We closed on Friday at around $79.30, and we've opened this morning at nearly $84. So over $4 higher than the close. As of now, the difference is at an all-time record. From 92 to 83, that's nearly $9 of difference. It's got to be a record. And 2026, 5 times as much as 2024 so far, and January's not finished, by the way, at 6,800 contracts were called for delivery. When it's called for delivery, it means someone somewhere is taking physical delivery of the silver. What's being demanded in January so far is 34 million ounces, that figure there, 34 million ounces, up from the 11 million ounces the year before, up from the 8 million ounces the year before that. The mined production has not been as high as the consumed production by industrial use. That's the first reason. So the production's going down from the mines, but at the same time demand has been rising. And the demand is coming from the electronics industry, which is a big consumer of silver, the solar panel industry, the automobile industry, and the weapons industry, all of which are said to use quite a lot of silver. Total registered silver available for delivery, 123 million ounces, and total eligible silver, 315 million ounces. Now, what's going to happen in March? So if we look at the March number, there's 101,000 contracts open in March. These are future contracts which, when we reach the delivery month, i.e. March, those who are the longs can, if they wish, call for delivery of, in this case, at the moment, 508 million ounces. And you can see there's only 439 million in the warehouse at COMEX, and of that, only 123 million is available for delivery at the moment. Silver is going higher. It looks like it's not trading at the moment in Shanghai. It leapt up this morning here when we came into in the middle, around midnight European time, went from 86.5 roughly in Shanghai to 91.5. It's now over 92. It's 92.08.
Silver has exploded to unprecedented levels, with COMEX hitting $83.22 and Shanghai reaching $92.08, a record $9 gap that signals severe physical shortages. January 2026, COMEX deliveries are already at 6,800 contracts, 5 times higher than January 2024, with 34 million ounces demanded for physical delivery. The fundamental crisis is clear. Mine production has declined for a decade, while industrial demand, electronics, solar, automotive, defense, grows annually.
During 2025, we saw that silver was made into a strategic metal in the United States. What that means is that government agencies are now authorized, if they wish, to buy and stockpile silver. China has said that any exports of silver from China need to have permission. Now, historically, China has been a net exporter of silver, but now saying it's got to have people have got to have permission to export it means that only a very small number of exporters will be able to do so, and getting permission might be quite long and tedious and complicated. So I think we can expect to see less silver being exported from China to the West. Silver manufacturers are hearing about the shortage of silver, and whether this shortage is real or imagined, it doesn't really matter. There's a worry, and so they'll be all diving into the market saying, we can't allow our production line to come to a halt. So they can't let the production line halt for lack of silver. And hearing all these stories, I think a lot of silver consumers, in terms of manufacturing, are saying we can't rely on just-in-time supply chains. We need to secure enough silver for a bit longer than that, just in case we can't get our hands on it. So there's probably this rush going on by manufacturers to make sure that they're first in line. It alleged, as it has done on many occasions in the past, that a major bank is in deep, deep, deep trouble by being short too many ounces of silver. I tried to verify whether there was any truth in that video. It looks to me like it's just a story that they made up for the purpose of getting clicks. So clickbait, really, when, according to the CFTC, the amount of silver shorts is, I haven't got the figure in my head, but it's something like 200 million across 22 banks. So how can one of those 22 banks be short billions when the total is only in the millions across 22 banks?
China has restricted silver exports, and the U.S. declared it a strategic metal, authorizing government stockpiling. With only 123 million registered ounces available at COMEX against 58 million ounces in March contracts alone, the system faces potential default. This price surge isn't speculation. It's manufacturers panic buying to avoid production halts, recognizing just-in-time supply chains are breaking as physical silver becomes unobtainable regardless of paper prices.
If you don't have any, and you feel that you should be having some, my advice is not to rush in. And I don't mean, and that's not a price prediction, it's more one of the psychological things. You don't know how you're going to feel if you buy some today and the price dips tomorrow. I have no idea if it will do that, but I'm just saying. So when I buy anything like a security or anything I'm planning to buy, I say how much am I willing to put into this, and I typically buy 1/3 of what I'd like to put in. Then I sit and wait, and it could wait a week, a month, or it could be a year. When I make my next purchase to get to 2/3, it really doesn't matter to me whether the price is higher or lower than what it was when I made my first purchase. The only question I've got is, when the time comes to make the second purchase, do I still want to make it? And eventually the third purchase can be made as well. And what's the evidence for a shortage? Well, the widening gap between the Shanghai price, here the green at the top, 92.08, and the COMEX price, 83.32, widest ever. This tells us that there must be a problem somebody's got a problem laying their hands on physical silver, because historically the gap has been 50 cents, a dollar, occasionally a bit wider. But when there's a gap between two marketplaces, the large bullion banks can simply pile a load of silver onto a plane, and it can come out of London or New York and be in Shanghai the next morning, ready for delivery, to arbitrage away the difference. But that's not been happening. So why aren't there plane loads of silver flying to Shanghai to take advantage of the much higher price in Shanghai? Well, to me, I think the reason is the silver isn't really easily available. It's not there. That again is a factor which is pushing up the silver price. And then, of course, we've got all the manufacturers, such as the car companies, saying, we can't rely on a supply chain which is just in time anymore. We need to have a certain stockpile. So I think that will be driving up the silver price too. But last but not least, we're having globally, I think, a general unease about the levels of government debt. Government debt is rising. Not much is being done to address it. And there's a real fear that we go into some sort of currency reset, perhaps with a CBDC, where they tell you that you can't use your old dollars in the bank. You have to use this new currency, CBDC. And although it's worth the same, one for one, there's restrictions on how much of your old currency you can convert into the new one, or what circumstances you could convert the old one to the new one at 1-to-1. And that effectively means that your old currency isn't deployable. So you might get permission if you're, for example, converting to buy your vegetables, but you might not get permission if you're planning to use the money to speculate against government bonds. We don't know what the rules will be when it comes in, but there could be a sort of reset where effectively we end up in a situation where only the new central bank digital currency is allowed to circulate, and you're not allowed to move your old currency into the new central bank digital currency, which means if you have a bond maturing, it's going to mature in your bank and you're going to have the old currency in your bank, but you can't actually spend it because you can't move it into your CBDC wallet because it's not authorized because it's above the limit. And of course, that helps the government a lot if it happens, because it means all of their debt will effectively be in the old currency and in a defunct currency. So you have a widening deficit. That's the gap between what's mined out of the ground and what's being consumed. That deficit's been growing bigger. So where does the difference come from? Well, the only place the difference can come from is by recycling old silver. So that would be, for example, your granny taking her candlesticks down to the pawn shop to be melted down, or it might be an exchange traded fund which gets net redemptions and sells silver back into the market, or it might be you or I deciding that we like the price and we take some of our coins to the coin dealer or bars and cash them in, and he will, if he's got too many, he'll send them off to the refinery and it'll find its way back to the manufacturers. But there's a second thing which I think is worrying manufacturers here, which is perhaps explaining the short-term rise in silver. If you buy something and then you think, you know what, I should have done that, and you've got a full position size, it's quite hard to deal with. Whereas if you just bought a third of a position size, you don't get trigger happy if it goes up because it's not enough profit, and you don't get trigger happy if it goes down, thinking, oh my God, I've lost my money. You can actually think about it more rationally when the position size is much smaller because it matters so much less. And then the other question people ask me is it time to sell? Well, if you want to sell some today, you're getting an all-time record price. My only comment on that is I personally prefer not to sell the entirety of a position. In fact, I prefer to keep at least the initial position. So if you have some silver and it's doubled, why not top slice if you want to raise a bit of cash, provided that you've got something useful to do with the cash, which is going to be as good as earning silver. Because if it's not as good as silver, why would you do it? My view is, if you've made up your mind you want to cash in, then probably look at just top slicing the profit, so you take some of the profit off the table and leave the rest of your silver working for you. Eligible metal that doesn't yet have a delivery warrant attached, but it meets all the requirements of the exchange and it's available for delivery to fulfill a futures contract. So when someone calls delivery, there's a warrant attached to it very quickly and easily, but it's ready to be delivered. It's the sort of metal which can be delivered and is delivered, and probably will be delivered if it's registered, when the contracts reach maturity. So only registered metal can be transferred to a long holder, the buyer, when the futures contract holder stands for delivery. On the other hand, we've got something called the eligible silver. Now, eligible silver is also physical metal stored in the exchange-approved warehouse, and it meets all the exchange's quality specification standards by fineness, weight, and so forth, and therefore it's eligible to be delivered against futures contracts, but it does not yet have a delivery warrant attached to it. It means it could be used for delivery, but it's not registered as such. In other words, it might or might not be used at a future date for delivery. It'll be turned into eligible and then delivered. But it can mean that this registered silver, the eligible silver, is held by another third party. So eligible silver can be converted to registered, and then registered can be delivered. But it could mean that the eligible silver is held by a third party, like an exchange-traded fund or a hedge fund or somebody who doesn't actually